Hey everyone, in this video, I'm going to try to answer if the trade desk stock is a buy at current valuations. I'm going to look at its revenue, its profit, its cash flow, and compare it to its valuation to answer if the stock is a buy. So let's jump right in looking at revenue, and you'll notice strong revenue growth from the trade desk, growing from about 200 million in 2017 in trailing 12-month revenue all the way up to 1.733 billion. Of course, the digital advertising enabler has benefited from the trend of more and more companies moving their ad budget to digital. Right now, more than 50% of ad spending, in fact, more than 60% of ad spending is through digital channels. That's transferring over. Digital channels are things like streaming content channels, things like Facebook, social media channels like that, and versus linear channels, which are like print newspapers, print magazines, billboards, things like that. And so you can understand that shift over to digital channels. That's where consumer attention has gone, and that's where marketers want to be. They want to be in front of consumers. And more recently, more and more digital advertising inventory is coming onto the market, and that's been good news for the trade desk because that's more inventory it can sell to buyers, and it'll make money from facilitating those transactions. You've heard Netflix add an ad supported tier. Disney Plus added an ad supported tier. Recent news today came out that Amazon's going to add an ad-supported tier for its Prime Video channel. So more and more businesses are adding digital advertising inventory. Not to mention retailers like Walmart and Macy's are even adding digital advertising inventory on their websites, on their apps, making it available. And so this has all been a tailwind for the trade desk that it's benefited from strongly here, as you can see in its revenue growth. So I wanted to look if the company's growing profitably, and it was making very nice progress expanding profitability before investing in new technology around late 2022, and now again it's making upward strides, generating positive 147 million in operating income in the trailing 12 months. And the good news with this company is that it can be a lucrative business once it establishes itself, invests in the technology to make its services better and better for marketers and buyers to use, and then it can reap the benefits of those investments. And the trade desk's cash flow from operations looks even better than its operating income. This is likely due to a significant amount of stock-based compensation used, and you could see 626 million of cash flow from operations in the trailing 12 months is nearly 6 times higher than the 100 million around 2020. And if you compare 626 million with the 1.733 billion in revenue, you can see the company generates over 33% cash flow from operations to sales, which is a very good metric to be sure. And so far looking at Trade Desk's revenue, profit, and cash flow, the company is making excellent progress on all three fronts, right? So if it's trading at a reasonable valuation, the stock would be a no-brainer buy. However, in my opinion, the stock is a little bit rich. It's trading at a forward price to earnings of 51.33, which is a little bit rich for me. I would say the stock is a little bit too expensive to buy right now. I would have liked to have bought the stock at around the forward price to earnings of 40. If it was priced at a forward PE of 40, I would say the stock is a buy. But at 51, it seems expensive to me. So I would say investors, if you're interested in buying the Trade Desk stock, add it to your watch list and wait for a dip and wait for a dip. And you might be able to catch it at a lower valuation over the next few months or so. All right, but that's all I've got for this video. Thank you so much for watching.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.